Everyone has felt it before. You just heard about the latest stock you're sure is ready to rocket. You researched the position, checked the stock charts, and waited patiently for the perfect moment to strike. 20 minutes later, the moment comes and you hit the buy button on what should be your biggest play yet. However, it's not moving like you thought. A stock that's been running for days suddenly turns downwards and takes out 20% of your portfolio within the week. So what exactly did you do wrong? How can a stock that has been running so perfectly turn so hard in just a few hours? Well, the reasons your trades may be performing so poorly are because of a little thing called FOMO. So what exactly is FOMO and how can we avoid this experience when trading in the future? FOMO essentially is the fear of missing out. When you're trading, there's one period everyone goes through before buying a stock, and this period is when you first hear about a stock, and it's the most crucial time for ensuring a good entry and avoiding FOMO when trading. The next time you hear of a stock for the first time, identify whether you really did catch the news before the breakout and before energy on a stock is beginning to fade away. Now, in order to check this, it's common for traders to use an indicator called RSI. This indicator allows you to get an insight into whether the stock is too hot or too cold before entering a new trade. Essentially, if you see the RSI reaching above 70 or 80, it's generally a good indication that the momentum could be pausing soon on that stock. Now, all stocks have to pause and consolidate before they can continue running, and this is essentially what causes this moment where most traders tend to jump in late and lose money. Now, moving on, I want to discuss a second way which we can know if a stock is too hot at the moment and if you should patiently wait to invest. Now, this way is less scientific but hasn't failed me a single time during my trading in 2022, and I really want to share this with you guys right now. Now, before we get into this technique, consider subscribing or liking if you've enjoyed the video so far, but getting straight into the second technique, this is an almost foolproof way to know when stocks will take a break and lose momentum. All you have to do is see the percent change for a stock on any given day when you are considering investing or especially after a big run. If this change is 6% or higher for the day, don't invest until you see a pullback. Around this mark is where the stocks will be in the 70 to 80 RSI range and where it's a good idea to potentially take profits if you have made a play for that day as well. So if the change is in the 2% range, then that's a more likely scenario to safely assume the momentum on a stock will continue or could continue into the next day. As always guys, comment below if you've ever used one of these techniques and how they worked for you, but as always, I hope all your trades are in the green.